All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market continues to kind of grind on higher here today. You can see we never got the downside kind of reversal confirmations, right? So none of that ever came in this morning. Came close, but didn't get there. Then we saw the market go set a new high, kind of took all that away. And we've just seen the market just kind of drift slowly higher on low volume, throughout the rest of the day here today. And, kind of typical of what we see on Fed parade days, where it's just, little bit here and there, trickling on up. You can see what this looks like on a 1-hour chart of S&P futures and what this week looks like. This is the week on S&P futures. It's a week where the market's going to end green if it were to close right here, right now, and green by just a couple points. It's had a lot more volatility associated with it than what most weeks have, but it's still kind of that similar result of just that little bit higher, that little pressing higher, and but really just not those kind of big thumps higher that I know many want to see. But, here today we're seeing nice comebacks and things like Microsoft, after the week, after the selling that we saw the last 2 days. Look, Microsoft to me is a good example of a lot of charts that are out there. And the trade is very simple. You can buy, if you want to be a buyer, you buy on today's open price. That's your stop, right? You buy on today's open price. Path of least resistance, is it higher? Well, if market goes higher, then yes, right? So that becomes the risk reward there for it if you're bullish. If you're bearish and you want to play it lower, you just let today's open prices break until you really look at them seriously. That's what you need to see is today's open price break. And there's a lot of that out there in the market today, all over the place, from Bank of America to Microsoft to, you name it. They're all over the place, right? So that's kind of the play there. Very simple. I don't think it's something where you have to get all fancy with indicators and fancy with moving averages and all that other kind of stuff. Because let's face it, most things are just kind of moving with the market right here today, as there are not a lot of individual catalysts. But anyway, that's that. We do see some individual things like a U.S. Steel massive short squeeze kind of coming into this here. Well, not kind of coming into this, absolutely coming into this here today, as the shorts get bamboozled here. This has been one of the few stocks that's been kind of a short safe haven. Those that have been shorting U.S. Steel have been getting paid, so they've been able to stay short even though the market's gone against. And now today, it kind of changes that element and that tone here a little bit with it. But, take a look at the financials. Financials here this week. This is a pretty bullish continuation pattern when it's all said and done. They sold off a little bit on the Fed on Wednesday, pushed into a new, pushed down, filled the Monday gap here yesterday, gapped on up. And this is just a bullish continuation pattern here for the financials. And, heck, you want to play the XLF, it's just today's low stop point or today's open, better level in my opinion, as the stop point and go. Now, I was asked about money flows in the market here today and if we're seeing it change, because yesterday I showed some of the dynamics in the market as far as money flows and some of the other market vibe elements. I'll go take a look at here the NYUD and the money flow element and how that's changing here today. Let's go get this on the consistent view. Here we go. You can see the money flow change here in it, right? And it changed yesterday afternoon. Yesterday, when we looked at this on video, it was strongly in the bear territory. But by the time the market closed, we saw some good volumes coming in to the upside, and you can see the big shot here to the upside. Now, obviously, this can change. We have a little sell-off into the close. This could change a little bit. but it is a piece that was showing some weakness, but now has shot into a new high, and yeah, it's sitting at a new high when the market isn't. Does suggest market path of least resistance could still be higher, but that's how we've seen the money flow dynamic shift here today. There has been a shift with it. When we look at some of the other market internals, some of the other metrics that we're starting to weaken, right? Like the number of stocks below the 7 day, right? We're seeing a lot of rebound in this here today, 331. So a big jump up. Normally, when you get a jump up that's uber bullish, it pushes up into the 400 level. So it's not quite there yet. But we saw yesterday the number of stocks breaking above or below the 20 wasn't really changing. And just like we talked about yesterday, it's just one of those where, yes, we've had some sell, we've had some warning. We have an increase in the average true range, but we don't have mass confirmation from the market metrics that this market's ready to turn. And what's it probably going to need? It's probably going to need a lower high to come into play. What does today's price action do? It potentially delays any chance of a lower high coming anytime soon. Right, if we start to see the market open up Monday, opens up a little bit higher Monday, opens up at a new high, right? It's still going to take quite a while to set a lower high when it comes down to it. So today does erase quite a bit of some of the short-term potential of a lower high coming in to the markets, but the bearish divergences that we're seeing in momentum oscillators, in some of the performance metrics, they're still all there. Today doesn't erase those divergences. In fact, in some cases, those divergences are only being amplified. But there's a big difference between market warning signs and, hey, actual realization of those warnings. And right now, what the bears have are warning signs. What the bulls have are warning signs, but nothing saying, "Hey, you know what? You've hit the bridge out, and now you're at the end of the train track, and there's no further to go." So far, there's still more train track to go, and yeah, there are some warning signs on the horizon, but it's still something that is plowing on forward. Okay. Now I've been asked to delay the challenge discussion here to Monday for a couple reasons, and so I'm going to do that. I'll talk about the upcoming challenge here on Monday, but bottom line, we'll kick off new challenge on Thursday next week, and that'll be live trading. Live trading challenge. I will show you a few of the tweaks to the challenge test, or how it's going to differ from this last test, because it's going to be kind of a compilation of, or a mix of all the different tests, and it's not going to be that different from what you've seen. And we'll be kicking that here off on Thursday. And, won't really have earnings to worry about in a big way. Do have a few extra stocks that are being added to the watch list. I'll show you those and really why they're being added to the watch list. And, GM's going away off the watch list, right? But anyway, we'll do that here on Monday. This week, we've talked about the stochastics, the RSI, the ETR, 3 different technical indicators, 3 really kind of fundamental, basic technical indicators. If you can wrap your head around those 3 indicators, the rest of the indicators start to build on those types of concepts. And as we go into next week, we're going to go look at things like the ADX. We're going to look at the parabolic SAR. We're going to start looking at other different technical indicators and how they're built, things like a Williams percent R. We'll play around with the MACD. A lot that can be done with the MACD. MACD is one of the fundamental indicators of the market, and I'll kind of show you just so many ways to use it, and I'll show you kind of how I use it, and how I kind of simplify it, and run with it. So we'll take a look at all of those next week, and kick off the challenge here next week as well. If there's anything you want me to look at, please let me know. As far as a lot of individual trades, each day I kind of show you a little bit of what the trade action is looking like, and some of how the setups. And today for me, it's just it's a buyer's market with a stop on today's open price from just an overall risk reward standpoint, path of least resistance standpoint. And if you can't stand to buy and you just want to short, you gotta let today's open price break. Today's open price has to break for you to have solid odds in your favor in the short run. Okay, thanks for hopping on. Have yourselves a fantastic weekend, and we'll talk to you later. Take care.